This is All India Radio. In the program Money Talk, now we bring you an exclusive interview with Ashwini Bhatia, whole-time member of the Securities and Exchange Board of India on G-20 Presidency and Indian market. Interviewer is S. Joy, EIR Correspondent.
Investors are the pillar of the financial and securities market. They determine the level of activity in the market. They put the money in funds, stocks, to help grow the market and thus the economy. It is very important to protect the interests of the investors. Investor protection involves various measures established to protect the interests of investors from malpractices. Securities and Exchange Board of India is responsible for regulations of the mutual funds and safeguard the interests of the investors. Investor protection measures by SEBI are in place to safeguard the investors from the malpractices in share, the stock market and mutual funds. The preamble of the Securities and Exchange Board of India Act 1992 prescribes the basic function of the Securities and Exchange Board of India to protect the interests of investors in securities and to promote the development and regulation of securities market. SEBI, in its endeavor to discharge these functions and its role as the regulator of Indian capital markets, exercises the powers enshrined within the SEBI Act, as it performs the triple functions as quasi-legislative, quasi-judicial and quasi-executive body. SEBI also plays a vital role in the standard-setting process as well as the policy work for the global securities market, being a member of the IOSCO board as well as most of its policies and standard-setting committees. SEBI thus offers the young and aspiring minds an interesting work domain replete with challenges. The role of SEBI investor protection has given out various methods and measures to ensure the investor protection from time to time. It has published various directives, driven many investor awareness programs, set up investor protection fund to compensate the investors. In simple words, it helps the investor find out its privileges and commitments in a specific venture. SEBI has been putting together financial backer schooling and mindfulness workshop through financial backer affiliation and market members. It keeps a refreshed, far-reaching site for training of financial backers. It distributes different sort of alerts to media. To understand more on how consistent efforts by SEBI are ensuring the protection of investors' interest in strengthening the Indian market, listen to this exclusive interview with Ashwini Bhatia, whole-time member SEBI, on how India is leading the world economy under its G20 presidency, startup boom in country, and efforts by SEBI to protect investors' interest.
Welcome listeners, in today's episode on India's presidency in G20, we are pleased to meet the whole-time member of market regulator SEBI, Mr. Ashwini Bhatia. In the board, he is handling the Department of Debt and Hybrid Securities, Alternative Investment Fund and Foreign Portfolio Investors Department. He is also an officer of Investor Assistance and Education. Mr. Ashwini Bhatia. G20 is the biggest platform where people are looking up to save their countries from certain problems. So what do you think about India's future?
Everything suggests that we are doing well. The world could be facing a tough year, but all indications currently suggest that we will still be growing and we could be one of the fastest growing economies in the world. And you talked about G20. G20 is a unique opportunity for us as a nation to showcase what we have done correctly. And the way after COVID, after all the troubles in Europe that we are currently seeing, yet we were able to run our economy well in a very, very balanced way. As I said, showcases a nation. So many meetings have already started as far as G20 is concerned. And I think for every citizen of the country, we should ensure that the G20 is a success. We can tell the world that we are on a great path. Digitization has helped. Our capital markets are robust. Our economy is doing reasonably well. And you already know we are the fifth largest in the world after US, China, Japan, Germany. I think today we are number 5. And with our favorable demographics, we should be doing very well. We've reached the Amrit Kal, the next 25 years, and I'm sure that we will keep on doing well.
Coming to the small investors, MSMEs are doing a lot. They form the major portion of our economy and they are the pointers of growth. What is the future of MSMEs?
MSMEs have a bright future, and the very good thing about the MSMEs is that they provide huge employment. These MSMEs over a period of time will become small cap companies, medium cap companies. After all the big companies that you have today in the Nifty index or the BSE index, 40, 50 years back, they would have been very small, right? So they have a major role to play. They grow faster also. And within the capital markets, MSMEs have a separate platform where listing for them is easier. Obviously, they can take a loan from the bank to increase their scale of operations, but they can also approach the capital markets for capital raising. As we become bigger, the growth happens. They should also be able, besides equity, they should also be able to raise debt from the capital market.
As you said, SMEs are looking out for mudra loans, and it is very easier for them to get it from the bank. In which field the investment should grow?
It's a very balanced growth that we are seeing currently. When an SME reaches a certain stage, you need capital. And where will the capital come? The capital will either come from your own profits. The capital can come from friends and relatives. But that is not the best way, right, to get money from friends and relatives. It's better that you approach the market, put in governance structures, put in your board, get in good governance, get in good management, and then the kind of growth that you will see, the quality of growth, we think becomes much, much better.
Coming to the question of startups, nowadays startups have been the order of the day.
India is growing very fast. We have a young population. Young population also means that the youngsters are very, very innovative. I think in global rankings, we would be in the top 2 or top 3 as far as the innovation is concerned. The way things have become simpler in the comfort of your homes. You may be in Chennai, but if you want to eat chola bhatura, you can eat it today. In old times, you had to go to some place to actually have that. Systems that have been brought in, the artificial intelligence, everything. And how is all the money coming? The money is coming through the capital markets. And capital markets, if it is robust, it will feed into the economy. It helps in capital formation, helps in nation building. So just to give you numbers, our current GDP is about $3 trillion. The market capitalization is $3.3 trillion. So 250 lakh crore is the GDP, 280 lakh crore is the market capitalization. But that we have 150 crore saving bank accounts, but only 10 crore customers have demat accounts. So people need to become from savers to investors. They have to be educated to make the most of the opportunity. Similarly, there are 14 crore mutual fund portfolios. There, the investment is only 40 lakh crores. Against that, today banking is at about 180 lakh crores. You can understand the difference. So gradually, as the awareness increases, we are very sure that more and more people will come into the market for the benefits that they get on taxation, on indexation. And if our nation has to grow bigger, capital market will play a very big role in the development of the economy.
Talking about an investor, should he calculate any risk factors which are involved?
There are plenty of risk in a market. If I may use a phrase, there's no free lunch. If you are getting 6% in a bank fixed deposit, don't expect 60% from the capital market. So if you want to become rich quick, this is not the way to come. In the markets, there will be people giving you unrealistic returns. Ask them how much money have they put in there. There are Ponzi schemes and people just get carried away. They should not be. Go to government securities, they will give you 6.5%. But if the capital markets or some other instruments is giving you 11, 12, that is also very good. Invest through SEBI registered intermediaries. Don't invest on rumors. It will never help you. If you come into the market with a trading mindset, then you are telling me that you have capital to lose. But actually you have capital to invest and you should be looking at the long run. They've happened in America. They've happened recently in other countries. In America recently one crypto exchange failed, which caused losses of billions. And the government and Reserve Bank of India in India have been telling you from the beginning that it is a very risky product and they will not permit it. So whatever you do, there is this NSE saying ki soch kar, samajh kar, invest kar. So if you understood it, planned it well, go for it. If you don't even go near.
Go to any website, they are asking to be an investor and you get a lot of returns.
The first check that they need to do is whether they are registered with SEBI or not. If they are not registered with SEBI, you do not deal with them. They are only making false promises just to earn some commissions. And those commissions, let me tell you, when we deal so many such cases, they are misleading. They are promising you profit, but you end up in loss. It's a very, very big lesson and a big caution to all your customers. Be very, very careful when you actually enter the market.
Fintech has become so common nowadays and India is leading. During COVID times, we did a great job. India seems to manage the stage better. What do you think about this?
Just imagine crores of people in our population, the way money was transferred through the Jan Dhan account system seamlessly. Crores of accounts were credited in no time when the government had to provide support to its citizens. So digitization has helped in a very big way. So I do remember that when Jan Dhan accounts were opened, all this was done in mission mode, and that finally helped to a great extent in reducing the problems that the customers could have faced during that period.
So online rummy issue is there and people are just going crazy about it and many have committed suicide also. What do you think about it?
Rummy is a game of chance if it is a card game. We are not here in a game of chance. We are here to protect the investors. We are here to ensure that the securities market runs smoothly. Anything that is not regulated, that does not have a registration in SEBI, don't trade. So yes, we know that so many platforms have proliferated on the internet. These are nothing but games of chance and gambling. They have nothing to do with the capital market. They have nothing to do with corporate. They are dangerous for your health. Stay away from them.
How does SEBI educate the investor?
I think that is a very important role that SEBI plays. So the mandate of SEBI is to protect the investor. And we cannot protect the investor unless the investor himself is educated and the investor himself knows what the market is all about. So people get very confused about a share market. What exactly is a share? A share is nothing. It is a share of a company. Company could have crores of capital and crores of shares also. But when you buy even one share, you are a shareholder. You have a voice. So once you become a shareholder, it means that you are a part owner of a company and you have a right to ask them questions, to see whether everything is all right, to look at its profitability, to look at its dividend, all those kind of things.
What would you like to tell the investors who are eager to invest the money by learning the market and going for it?
Don't enter the market if you don't understand. If you enter for the long term. Invest for a long term. Be a shareholder, be a owner. If you are putting your money in shares, you should also be voting in the AGMs. You should be looking at what is happening in a company. You should also know the risks that come with investing in a market. And in markets, you need to be patient. Don't expect to make money yesterday. Again, just to give you numbers, if you're getting 7% in a bank deposit on a daily basis, you are getting 0.02% only. But once you start investing in equity, you want to make 1% every day. But how is it possible? How can you make 50 times more in one day as compared to a fixed deposit product? It is a game of patience. It's a game of perseverance. It is a game where you should learn. If you don't understand it, please go to an advisor. Please go through a mutual fund, but your returns will be much, much better. We have seen over the last 40 years, the average return given by the equity markets is about 13 to 14%. As compared to that, fixed deposits have only given about 7%. The compounding impact is so huge.
Thank you so much.
You were listening to an exclusive interview with Ashwini Bhatia, whole-time member of the Securities and Exchange Board of India on G-20 Presidency and Indian market. Interviewer was S. Joy, AIR Correspondent. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on our mobile app News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may email your opinion about this program at airnsdtalks@gmail.com.